Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hi everyone, this is Yazad. Even as the BSE Sensex flirts with its all-time highs this month, there are sectors which have not only underperformed the market, but have given negative returns in 2022. While on one hand, we have the BSE BankX, which is up 21% this year, or the BSE Power Index up 33%, there are also laggards such as the BSE Realty Index, which is down over 3% since the beginning of the year 2022. And it's not just 2022. From demonetization at the end of 2016 to the crisis with non-banking financial companies to finally the pandemic, the sector has witnessed one disruption after another. To further complicate matters, the industry had to deal with the new Real Estate Regulations and Development Act, RERA, and of course the launch of the Goods and Services Tax, GST regime. All of these pose serious challenges to the real estate industry. However, the pandemic led to a paradigm shift in home buyers' attitudes and reinstated the importance of owning homes. After that, there was no turning back. The demand for residential properties increased and the unsold inventory decreased drastically. This marks the beginning of another cycle for the real estate sector, and it is expected to witness a strong revival. Residential sales have already surged 51% in the post-pandemic era. Home prices are expected to increase 7.5% nationally this year, the fastest growth in 5 years, according to Reuters' poll of property analysts. Average house prices were forecast to rise 6% next year and in 2024. While the economic indicators are in favor and have a positive tick, the government's focus is more towards making housing affordable and available for everyone. The government's push for housing for all will fuel the demand for affordable housing and in turn generate much needed liquidity in the sector. Real estate is the second largest sector after agriculture in India, making a significant contribution to the GDP. In 2020, it contributed 7% to the country's GDP. Between 2022 and 2027, the real estate segment is expected to record a CAGR of 15%, and by 2040, the industry might surpass 650 billion rupees from the present 120 billion in 2019. The industry is expected to cross $1 trillion in 2030 by market size, up from $200 billion in 2021, and could contribute to 13% of the GDP. However, the unorganized sector continues to largely dominate the industry. The organized real estate companies have less than 20% market share in large cities. Within the organized players, some of the large players are Oberoi Realty, DLF Limited, Macrotech Developers Limited, Sobha Limited, Suntech Realty Limited, and Godrej Properties Limited. With markets close to their highs, beaten down sectors such as realty may offer an opportunity for long-term investors to participate in the exponential growth expected in the real estate sector. With that in mind, let us look at India's largest developer by residential sales, Godrej Properties Limited, and why it might be prudent for investors to add this stock to their watch list for 2023. Godrej Properties Limited, or GPL, established in 1990, is one of India's leading realty companies and has successfully delivered 23 million square feet of real estate in the past 5 years. Godrej Properties is part of the 125-year-old Godrej Group, one of India's most trusted business houses. Real estate is considered a key growth business for the Godrej Group. GPL has always anchored its strategy mainly towards residential developments, as against other players which juggle their capital allocations between office, retail, hospitality, and residential projects. Over the years, the company has an envious track record of seamlessly completing projects with the shortest production time from land acquisition to approvals to launches and sales. GPL's differentiation versus its peers is that it focuses on land parcels which have a quick turnaround time and a shorter go-to market time, rather than pooling long-term strategic land bank inventory. This strategy has resulted in strong market share gains over the years in the top 4 regions of Mumbai, Pune, Bengaluru and NCR, and continues to augur well for the company's growth and efficient capital allocation. In order to obtain approvals, real estate is typically a highly localized type of business. Perhaps, GPL is the first company that has successfully transitioned as a pan-India real estate player. In recent times, the company has been on a land acquisition spree across property markets such as Pune, Bengaluru and the National Capital Region to develop a pipeline of housing projects. The real estate firm has been steadily acquiring land parcels and expanding in 4 major markets, that's the Mumbai Metropolitan Region, MMR, Delhi, NCR, Bengaluru and Pune, where it has a strong presence. In February this year, GPL's Executive Chairman, Firoz Shah Godrej, had said that the company will invest around $1 billion over the next 18 months on development of new projects. But the company has already exceeded its guidance within the first 8 months of the financial year and has no intention of slowing down. Buoyed by strong housing demand, GPL continues to acquire land for future development, having added 8 new projects so far this fiscal with an estimated revenue potential of $2 billion. And GPL's Executive Chairman Firoz Shah Godrej is hopeful that the company will add many other land parcels over the next quarter as well. Armed with 47 billion rupees of surplus cash and 74 billion rupees expected to be generated over the next 4 years, the company's momentum in business development looks set to continue over the coming quarters. Further, it must be noted that the company enjoys the lowest bank funding rates versus peers in the sector. This is on the back of strong parentage, decades of the group's banking relationships, and robust corporate governance policies. Low cost of capital helps the company acquire land banks at lower prices, and the group's track record helps it get more significant and durable funding lines from banks, other financial institutions, and capital providers. GPL reported its highest ever sales for the first half of any financial year, with booking value at 49.3 billion rupees. Total income grew by 13% to 3.2 billion rupees, and net profit grew 54% to 500 million rupees in the second quarter of the current financial year. For the first half of FY23, the company sold 5.5 million square feet of area as compared to 4.3 million sold by the company in the second half of FY 2022, a growth of 26%. Booking value increased by 60% in the first half of FY 23 to 49 billion rupees as compared to 30 billion rupees in the second half of FY 2022. If we look at the consolidated financials, total income increased by 34% in the first 6 months of FY 2023 to 7 billion rupees as against 5.2 billion rupees in the period between October 2021 to March 2022. Profit also jumped similarly by 32% from 900 million rupees to 1.2 billion rupees for the same period. With the company aggressively pursuing acquisition of land parcels across the country, GPL's net debt has increased significantly from 4.6 billion rupees in March 2022 to 13.6 billion rupees as on 30th September 2022. This has resulted in the net debt to equity ratio increasing to 0.16 from 0.05 for the same period. It, however, must be noted that even yet, the company has one of the lowest debt equity ratios amongst its peers in the realty sector. The average borrowing cost has also moved up slightly from 5.95% in March 2022 to 6.04% in June 22 to 6.25% as on 30th September 2022. Here are the ongoing projects of Godrej Properties Limited as on 30th September 2022. GPL has 16 residential projects in the East-West zone, including cities of Ahmedabad, Kolkata, Nagpur and Pune, with an estimated sale area of 76.3 million square feet. In the South Zone, GPL has 22 residential projects covering the cities of Bengaluru, Chennai and Kochi, with an estimated sale area of 37.1 million square feet. In the North Zone, which covers the cities of Gurugram, Noida and NCR, the company has an estimated sale area of 27.5 million square feet, covering 18 residential projects. Finally, in the Mumbai metropolitan region, the company has an estimated sale area of 42.3 million square feet, covering 27 residential projects. Additionally, the company is also developing commercial projects in Ahmedabad, Chandigarh, Pune, Kolkata, Bengaluru, Mumbai and Gurugram. These commercial projects comprise of an estimated saleable area of 7 million square feet and 6.2 million square feet for building to lease. The stock of GPL has had a stellar run since its listing in January 2010. GPL had listed at 510 rupees on the BSE at 16% premium to its issue price of 490 rupees, and ever since then it has outperformed its peers. And the outperformance is significant. An investment into GPL's IPO would be worth 6 times an identical investment into the BSE Realty Index over the last 12 years. The 12-year CAGR of GPL stands at 13.8% as compared to a negative return of 1.1% for the BSE Realty Index. However, the stock has underperformed the broader market this year and is down 31% since the beginning of the year. The stock, which had touched a lifetime high of 2,502 rupees on October 14, 2021, fell to a 52-week low of 1,130 rupees in June this year, and ever since has languished close to these levels. So has something changed with the fortunes of Godrej Properties this year? Analysts believe that there are 3 primary reasons for the dismal performance. First, in spite of bouncing back to the near pre-COVID levels in 2022, some players are worried the real estate market could be hit by the skyrocketing inflation, repeated repo rate hikes by the central bank, and overall volatilities. This is why the BSE Realty Index has been a non-starter this year, with most real estate stocks not having added any further to their gains of 2020-2021. Secondly, delayed approvals resulted in slower launches for Godrej Properties in the financial year 2022. This was one of the factors that dampened sentiment towards the stock. Finally, in February this year, Godrej Properties announced plans to invest 4 billion rupees to acquire around 10% in DB Realty and set up a 6 billion rupees equal joint platform to develop slum redevelopment projects. Immediately after, the stock plunged over 10% after several analysts raised concerns over the deal. While some experts said investing in DB Realty exposed Godrej Properties to the risk of capital misallocation, a few raised corporate governance issues. The company eventually scrapped the deal based on market feedback, but the stock has still not recovered ever since. Is the price of GPL at current levels justified? Is it overvalued or undervalued? In truth, the intrinsic value of a realty stock is very difficult to define. Is it the current market price, the company's land bank, its earnings per share, cash flows, PE ratio, or expected future earnings? But what we do know is there's no denying that real estate stocks could potentially be in high demand. After all, in a housing deficient country like India, the sector has to constantly grow. And a blue chip like Godrej Properties, being the largest player pan-India in residential projects, should be a good option to add to one's watch list. GPL has been aggressively buying land parcels over the last 6 months, which it had largely refrained from in favor of asset-light development models all these years. The company's management believes the Indian real estate sector is in early stages of a multi-year recovery cycle, and the company is looking to cash on it to enhance margins and improve risk-reward returns. Further, as per the management, the company has been buying land parcels at an attractive valuation. As the sector continues to strengthen in the next 2 to 3 years, real estate prices and volumes are bound to improve. Hence, buying land parcels aggressively may be a good shift in strategy from its earlier asset-light model of business. The management is on track to meet its guidance to cross 100 billion rupees in booking value in the financial year 2023, a growth of 27% over the previous year. GPL's Executive Chairman Firoz Shah Godrej expects GPL to grow at a similar rate over the next 3 years as well. While the global macroeconomic environment deteriorated in the second quarter, India's economy continues to outperform and residential real estate demand continues to remain robust. At the halfway mark of the financial year, we are confident of achieving our booking value guidance of 10,000 crore rupees for FY 2023. We are witnessing a lot of momentum in business development and hope to deliver GPL's best ever year for new project additions through strong momentum in the second half of the year. This, in turn, will ensure that the sharp increase in booking value this year is continued in the years ahead. Said by Mr. Firoz Shah Godrej recently. The robust predictions of India's real estate market could make it one of the desirable sector to put one's money into for long-term investment purposes. Housing has a strong aspirational value, and it can also provide a constant income on a rental basis for property owners. Indian investors are once again recognizing the advantages of real estate investing, particularly at a time when cautious investment is still the general consensus. For investors looking at realty stocks, now might be a good time to add Godrej Properties to one's watch list. And with that, we come to the end of this week's video. Thank you very much for watching. This is Yazad signing off. Happy investing. Goodbye.